Okay, welcome back everybody. Flip and Hold Funding Realty Solutions. We're taking a deeper dive into our passive investment opportunities via our loan fund. And we talked about, quick intro on what passive investing is. And now we're going to talk just a very quick minute or two about diversification. So, I always have this conversation with people, and I have this conversation with my financial planning team as well. Why not just put your money in the stock market, people say, right? And we could talk about, well, why not just put your money in a bank? Why not just put your money in a CD or a money market account or even a treasury bill? Let's dive in, okay? You might be thinking, I've heard about these crazy returns in the stock market. These AI stocks are 10x, 20x, 30x. It's attractive, believe me. I also, full disclosure, take a small piece of my investments, and I currently have a very small allocation of my portfolio in some of these more speculative, and risky stocks, but it's a very small piece. I believe diversification is key, but if you're going to have a piece of your money in the stock market, we understand the risks of the stock market. We understand the volatility of the stock market. We understand, it's up 1,000 points today. It's down 1,000 points tomorrow. The net average return of the stock market is somewhere historically between 9 and 11%. Right? But there are these speculative buys and stocks that you have people making a ton of money on right now, and that's great. But with every speculative score that's out there, there's someone also losing a fortune as well. So we try to offer, an alternative to that. And a lot of our clients have plenty of money in the stock market, but then they take an allocation and they give it to us and invest it in our loan fund. Right? So it's all about diversification. So we've all heard the saying, don't put your eggs in one basket. And the same goes for your investment portfolio. When you invest with Flip and Hold in our loan fund, your money is not tied to those ups and downs of Wall Street. It's not tied to those speculative stocks. It's tied to steady, solid, double-digit returns tied to our first position real estate loans, right? Again, we said you get steady, predictable monthly income. And that's, again, income that's tied to the tangible assets right here in New England, right? So I just did a post on LinkedIn the other day about how, you can never bet against real estate in New England, even if it goes down temporarily, like we saw in, 08, 09, 010. Look at the market now. Look at the market since 2020. There's just not enough inventory here in New England that we would really ever see a huge decrease in value or a crash in value that then sustained over a long period of time. It's just New England is a very safe place due to the inventory restrictions, due to the due to the fact that all the communities around us are trying to preserve land and conserve land. We don't really fall into that area like some of the Southern Belt states do, where supply is ever going to outpace demand, or at least in the foreseeable future. So it's our loans are tied to steady, predictable monthly income, and that's why we think we're such a great diversification tool for people that have money in the stock market. Now, conversely, people that have money sitting in a bank, right? Well, do you know your money's at risk sitting in a bank as well, right? Although your money the bank might insure, your money might be insured via the bank's FDIC or DIF policies, right? Which are federally backed. Either up to $250, $500, or DIF is dollar for dollar. Well, guess what? If the bank goes under, then your money is still at risk as well. And you're only getting, 1 or 2%, right? The same thing with money market accounts and even treasuries. Treasuries are always told that they're a safe, stable bet in the United States of America, which I have money in treasuries. Right, but as my accountant pointed out, you're getting taxed on that treasury money. So you're paying whatever a treasury's paying right now. A T-bill's at 4%, a money market's less, bank interest is even less. Then you're getting taxed on top of it. So it makes sense to take some of that money and invest in something that's still stable, like Flip and Hold's loan fund, but yet able to achieve the double-digit returns. So I'll let you chew on that for a few minutes as we segue into our next section here.